Let's understand what is GST. Goods stands for tangible things that can be seen or touched, like mobile, books, and services cannot be seen or touched, like service or the doctor, advocate, etc. Goods and services are the output of an economic system in which items sold to customer. Good and services tax is an indirect tax imposed on the supply of goods and services. It is a multi-stage, destination-oriented tax imposed on every value addition, replacing multiple indirect taxes including VAT, excise duty, services tax, etc. GST was implemented as a tax regime in 1954 in France. In India, it was first implemented as a tax in 2017. Advantages of GST. First, it is easy compliance. A robust and comprehensive IT system would be the foundation of the GST regime in India. Therefore, all taxpayers' services such as registrations, returns, payment, etc. would be available to the taxpayers online. Second, removal of cascading. A system of seamless tax credits throughout the value chain and across boundaries of states would ensure that there is minimal cascading of taxes. This would reduce the hidden costs of doing business. Next is gain to manufacturers and exporters. The subsuming of major central and state taxes in GST, complete and comprehensive set of inputs, goods and services, and phasing out of central sales tax would reduce the cost of locally manufactured goods and services. Higher revenue efficiency. GST is expected to decrease the cost of collection of tax revenues of the government, and will therefore lead to higher revenue efficiency. Relief in the overall tax burden. Credits of inputs tax paid at each stage will be available in the subsequent stage of value addition, which makes GST essentially a tax only on value addition at each stage. Next, simple and easy to administer. Multiple indirect taxes at the central and state levels are being replaced by GST, backed with a robust end-to-end IT system. GST would be simpler and easier to administer. Now, what are the drawbacks or disadvantages of GST? Let's understand. First, increased software cost. Before the GST regime, most businesses in India, these software and solutions were formulated in accordance with the then existing tax laws and structures, now required to upgrade to more expensive GST compliant software. This means an increase in operational costs in the form of software purchases and the associated training to employees. Next, it is difficult migration to online filing system. Since the new tax structure came into effect, almost every aspect of the tax is handled online. With the advent of modern-day technology, the adoption of digital solutions by businesses is gradually increasing. However, little space is dedicated to such solutions for small businesses. Next, loss in the real estate sector. There has been a major impact on the real estate market due to the implementation of the GST. It has led to an increase 8% in the price of the real estate sector. It has led to a 12% decrease in the demand for properties. But it might also be a short-term trend and might not last forever. That is loss in the real estate sector.